And I think that is the reason why cult followings happen on growth companies is because a group of investors believe in where a company is going. So it's beyond the current quarter, to your point, Melissa. And I think that's really the hinge factor and going to be the X factor here in terms of how this plays out. If, in fact, they can proceed on their growth, I think that the stock moves higher. And I think that's ultimately, it's going to drive, I think, some of the Tesla bears mad here over the next couple of years, because there will always be this carrot out here because they're getting into some massive markets, always this carrot out there that Tesla is going to be able to turn the corner and really hit some new growth vectors. Ford's their E division's losing $35,000 on a car. They're just ramping up on there. Tesla's making $10,000 per vehicle.
In this video, the Tesla cult, Tesla's X factor, and a Tesla bear suddenly starting to turn a little more bullish. And in case you haven't heard, in addition to continuing to produce exclusive content over on Patreon, I'm now also producing subscriber-only content over on Twitter at Stephen Mark Ryan, and posting early access to all of my daily YouTube videos for subscribers only over on Twitter. Check out the links in the pinned comment.
Where do you think we are in the Tesla story right here, right now?
So right here, right now, we are challenged. The company's margins are going down a little bit more than what investors had hoped. That critical metric was EV gross margins ex EV tax credits. That came in at 19%. It could have been 20%. They are feeling the pressure here, and it is impacting their business. And I want to jump back to an important point that Dan made about the cult piece of this story. And I think that is the reason why cult followings happen on growth companies is because a group of investors believe in where a company is going. So it's beyond the current quarter, to your point, Melissa.
Interesting. The reason a cult following on a growth stock happens is because investors are looking out further than this quarter. Was that what Gene was saying in a nutshell? Investors believe that out beyond this quarter, over the long term, very bright future, that's how a cult following on a stock occurs. Okay, well, by Gene's definition, make no mistake, Tesla is absolutely a cult stock. I think there are many Tesla stock investors looking out beyond next quarter, some even beyond next year, and believe it or not, some even into next decade. Hard to argue with Gene's point if that's the definition of a cult stock.
And I think that's really the hinge factor and going to be the X factor here in terms of how this plays out. If, in fact, they can proceed on their growth, we can talk about what that growth strategy is. I think that the stock moves higher. And I think that's ultimately, it's going to drive, I think, some of the Tesla bears mad here over the next couple of years.
Well, I definitely agree with Gene's point. Although, in fairness, I think it's fair to say that Tesla bears are, not will be, but are mad in more ways than one. Think about it.
Because there will always be this carrot out here because they're getting into some massive markets. Always this carrot out there that Tesla is going to be able to turn the corner and really hit some new growth vectors.
Hard to argue. And regarding those growth vectors, I think this is something a lot of Wall Street analysts struggle with. They're unwilling to take any leaps of faith. You can't stick unassailable data lead in terms of solving autonomy into your spreadsheet. You can't stick successfully deploying the humanoid robots into your spreadsheet. Well, actually, you probably can. It's in mine. You can't stick Dojo as a service, as a call option that may pay off, a multi-$100 billion revenue stream, if it does pan out, into your spreadsheet. You can't stick Elon Musk's Twitter following of what now, close to 140 million people into your spreadsheet. By the way, quick note on the folks demanding Tesla begin advertising yesterday. It's kind of strange. I haven't seen a single one of these people, and maybe I'm wrong. Let me know if I've missed something, but I haven't seen a single one of these folks suggest instead, why wouldn't Elon Musk himself start sharing a little bit more educational videos and information about Tesla and the benefits, the perks of their products? This is a serious question. Elon Musk has an audience of well over 100 million people. You'd think the most low-hanging fruit of all will be for Tesla to put together some informational, educational content, some of the perks, the facts about their vehicles, many of which they've already done and are available on YouTube. If Elon Musk were to do a series of tweets now and then, just pointing out some obvious stuff like the safety of Tesla vehicles, the cost of ownership, the over-the-air updates, the range, how easy it is to recharge, these kind of things, to his audience of, one more time, over 100 million people, for free instantly. I mean, maybe I'm just crazy, but I would have thought that'd be the most obvious first step rather than spending money advertising and then having a huge lag time and not being sure, did that ad work, which ad worked, which ad didn't work. I mean, seriously, is it just me? If Elon, for example, just hypothetically, I'm just making these numbers up, they're definitely not representative of reality right now, were to tweet, Tesla's Model Y is now more affordable than the Toyota RAV4. It's cheaper. and it costs a lot less to own and operate. You recharge it overnight at home, etc. Do you think that single tweet might reach a wide enough audience to sell a few more Teslas? I'm just asking the question. It's just really bizarre. It's almost like people who live in a box can't think outside the box, and therefore wouldn't have even thought of that one, would you? Strange. I'm just kidding, by the way. Obviously, Elon Musk shouldn't even be tweeting because he's destroying Tesla's brand with his opinions, like this one where he's clearly lost Tesla at least 6.5 million potential customers by tweeting this horribly misogynistic, extreme right-wing conspiracy theory. I quote, "Being a mum is a real job that deserves major respect." We really got to rein this guy in. I think I might run for Tesla's board to just shut Elon up. What do you guys think? Let me know in the comments below. Look at all this brand damage.
So Gene, again, a $570 billion market cap company that's down from $1.2 trillion at the end of 2021 here. And again, you just heard us kind of talking about this. I mean, there is clearly a change in the fundamentals in what's going on with the company. Even when the stock was careening lower in 2022, they weren't cutting prices there. And they sounded pretty confident about their ability to manage supply chains coming out of this uncertain period. They're still calling it an uncertain period. And we haven't even had the, the recession that we're all expecting. So I guess my question to you is, you've covered high growth, high valuation, tech companies in the past here. What's different about this one? Because as long as I've been in the business, every single time there's been a special story like this with a special guy like Elon, it's always come undone. And I'm just not certain down 55% really means that that's it, that it's come undone and that's it. And we can get back to, just like not caring about valuation and let it start working again.
So this is Apple. Just so this must be wrong. Somebody, where do I submit a bug thing to Google? They've got the wrong data here. I can't find the undone part. It just sort of seems like Apple IPO'd in 1983 at 23 cents per share, and today $165 per share. And it looks like it's just essentially grown exponentially that entire time. A few ups and downs along the way, but where's the coming undone part here? Struggling. Maybe Amazon. Let's try Amazon. IPO'd at 9 US cents, now $106 per share, and it IPO'd in 1997. Where's the coming undone part here? Just looking here. Can't find it. Still can't find it. Almost 120,000% since IPO. 1997, it wasn't that long ago. Most of you were born before then. Oh wait, I know. We forgot. It's my mistake. Oh man, I forgot. We're supposed to be looking over a micro penis length time horizon. Of course. Dan must be referring to these little blips where Amazon stock collapsed from $33.79 all the way down to $25. Or maybe when it collapsed from $98 after IPOing at 9 cents to maybe $68. Or maybe the recent collapse from $185 all the way down to $106 after IPOing at 9 cents. Same thing happened to Apple, right? Here we go. Here's a good one. From $23 all the way down to $15. How about this? From 56 down to 39. Or the most recent collapse from 179 all the way down to $165 per share after IPOing at 23 US cents. Dan's really got a point, doesn't he?
Well, I'm not certain how this ultimately plays out, but one of the reasons why I think what's most important here is just the trajectory of margins and growth. And you're absolutely right, is the fundamentals have not looked good. This has been a downward trajectory, especially on margins. But to answer your question, what could reverse this ultimately is that I still believe, and this is going to be one point that's going to be hard to probably shake me from. I want to be a level-headed in all this, but I still think traditional auto is in a tough spot. Ford's their E division's losing $35,000 on a car. They're just ramping up on there. Tesla's making $10,000 per vehicle.
So Ford losing $35,000 per electric vehicle, and Tesla making $10,000 give or take per electric vehicle. That's a gap of $45,000. Riddle me this: if a company, the company that's making the $10,000 per vehicle, reduces the price on their vehicles, and the company that's losing $35,000 per vehicle wants to continue selling vehicles, if the company that's already losing $35,000 per vehicle sold reduces prices even further to compete with the company that's making $10,000 per vehicle sold, I'm not very good at math, but does that mean the company that's losing $35,000 per vehicle sold will lose even more dollars per vehicle sold if they try to compete on pricing with the company that's actually making money after cutting their prices? Is that how math works? I don't know. Can somebody help me in the comments? I'm not very smart.
So to answer your question is, if they can continue to do what they're doing, being profitable at going after what I see as some large addressable markets around energy and transportation, storage, I think that the story can turn around. And so the Elon factor, agree. He's a wild card, but I think the markets that they're going after are so big that this company can continue to move higher.
The guy does make some reasonable points.
There was some narrative that commodity costs were coming down, and so even though Tesla was cutting price, maybe margins wouldn't be as bad as investors thought. But ultimately they were, and they came in lower than Tesla's guidance and lower than street expectations. And that was really the incremental news for investors. As a result, earnings estimates have come down materially for next year.
Yeah.
I think in November of last year, people were thinking Tesla would earn $6 this year. Consensus estimates today are under $3.
So you're underperformed, price target 150. You've been negative, Tony, for how long on Tesla?
We've had a sell rating for a couple years now.
So at this point, how much is this part of the thesis, the bear thesis?
Look, we think risk reward is much more balanced now. We've had a pretty consistent price target of $150 for 2 years, and the stock went to $400. And our conviction has been, when we look out over the long term and try and value it on a discounted cash flow, $150 is the right price target. So we're obviously much more comfortable with the stock price here at 166 than we were when the stock was over $400. I still worry in the near term that we are going to see further price cuts. China has very limited lead time. Tesla has not cut price there this quarter like it has in the US and Europe. We think that's likely. That's probably not baked into numbers. And I think as we look to next year, Tesla wants to grow another 30, 40, 50% next year. And the challenge is it doesn't really have anything new coming to market. It has the Cybertruck, but that will be low volume. So how will Tesla grow 40, 50% again next year? It's probably going to put more pressure on margins. And so the near-term setup is pretty tricky for Tesla. And we think it's more likely that numbers may go down rather than go up. And that usually doesn't serve a stock well in the near term. On balance, longer term, we feel a bit better with the stock price down at this level relative to where it was a year ago.
Tony makes some fair points, and I tell you what, the tide is starting to turn. This guy has been bearish on Tesla for years. Now the stock's collapsed to what I personally believe are absurdly low levels. Time will tell, still buying. Even Tony's starting to be a little bit more comfortable with Tesla's current valuation.
We had you on in early April, Tony, and at the time we were talking about how rivals would respond to the price cuts. You said incumbents are pretty deep-pocketed and not likely to back down. That's kind of exactly what we heard from at least Renault today.
Yeah, so look, if I think about traditional OEMs who are making the transition to electric, investors are really putting most stock into how successful they are in their EV transition. And so if the EV transition is going to take more money to get there in terms of bigger losses, I think the OEMs are going to go along with it, because that's the key metric for investors today, is how quickly can you transition to electric. And so even if margins have to be lower, I think most OEMs are going to say, so be it. We cannot compromise our ability to show that we can make the EV transition going forward. And so unfortunately, we're in a circumstance where we have a hyper-competitive industry. We have a leading player who's cutting price, and that's going to lead to worse profitability for the entire industry.
He's absolutely right. And it's really important to understand this, because as Tesla drives their prices down, they have the cost leadership. They're making a shit ton of money per vehicle sold. They can afford to cut prices much more than they already have and still make industry-leading profits. As they're doing this, if Tesla's so-called competition wants to actually be able to sell the electric vehicles they're making and already losing multi-tens of thousands of dollars on every vehicle sold, they will need to follow suit, which means they will be bleeding even more money. At the same time, their ICE sales collapse, their ICE profits collapse, and they have to invest tens of billions of dollars building out EV production capacity. I'm not sure how this ends. And in totally unrelated matters, has anyone ever heard of the Titanic? Nah, me neither.
But these are deep-pocketed competitors, and the priority is to move to electric. And so if profits have to be weaker in the near term, that's what they're going to do, I believe. That's the trade-off choice that they're going to make.
He ain't wrong. They literally told us they're happy to sell vehicles for zero profit for now to continue building out the fleet, collecting data, and putting in the foundation for an absolute money printer, possibly the biggest money printer in the history of money printers. Autonomy. All of this discussion is around this quarter, next quarter, and maybe this year and next year. At most, many investors right now are making the mistake of missing the forest for the trees. I'm happy about this though. I'm still buying with every spare cent. Oh, and I have a very important message. However, it's only for some of you. If your diet's trash, you don't exercise, and you don't care about sleeping enough, you can stop the video now. For everyone else, since you've laid a solid foundation, check out Athletic Greens AG1. Most of you will know now, I've been taking this stuff for more than 2 years. I absolutely swear by it. 1 scoop, once a day, every day. And it's had a profound impact on how I feel, perform, and show up. And that's the reason I continue to bang the drum on this. There's a lot of upside to feeling and performing your best, and very little downside, if any. An impeccable diet will only get you so far. AG1 is packed full of 75 high-quality vitamins, minerals, and whole food source nutrients. And in addition to that, it has digestive enzymes, prebiotics, probiotics, and adaptogens to help you deal with stress. Promotes gut health, boosts immunity, and meaningfully increases energy, at least in my experience and that of almost every single person who's tried it. Plus, if you head to athleticgreens.com/SMR or use the link in the pinned comment, you get a 1-year free supply of vitamin D3 and K2, and you'll be well on your way to feeling and performing your best. I think one way to describe Athletic Greens AG1 from my own experience has been like turning the difficulty level on life down just 1 or 2 notches. More energy means everything's easier, and you've got more capacity to do what you need to get done. No need to take my word for it. Here's what some of you guys and girls have to say. On screen now, a bunch more testimonials. If you guys want to read them all in detail, go for it. But there are a lot of recurring themes here. More energy, more motivation, more exercise capacity, better recovery from exercise, positive impact on mood, sometimes even cognition. Some people finding it's improving their sleep, others finding some assistance with long-standing health issues. And interestingly, and no doubt due to the adaptogens to help you deal with stress, a lot of people are mentioning that they're seeing a reduction in anxiety, including the example on screen now. Female viewers saying it's helping alleviate some of the symptoms of their period and meaningfully increasing libido. Many folks feeling more motivated, more ambitious, more driven, getting more done, more switched on at work, improved mental game, reduced social anxiety, not just overall anxiety. And I think this one on screen right now really sums up my own experience. This person leaving some feedback, despite turning 40 years old in June, they're now feeling like they're in their mid-20s, and this sums up my experience precisely. I literally feel like I'm 20 years old again. I don't look it, but I really do feel it. So what are you waiting for? Head to athleticgreens.com/SMR or click the link to the pinned comment. Start your daily health habit now, and please, I'd really like to know how you're feeling in a few weeks' time. The reason I ask is I'm trying to have a positive impact here, and I like to solicit feedback. No, I'm doing some good. That's the reason I continue to bang the drum on this stuff. Just trying to help you guys and girls feel better. Seems to be working. So, click the link in the pinned comment or head to athleticgreens.com/SMR. Let me know how you're feeling in a few weeks' time. And don't forget, I'm continuing to post exclusive content over on Patreon, which also includes my Tesla fair value, aka formerly known as price targets, and optional access to my Tesla valuation model to supporters at the investor level and above. Plus, there's already an archive of well over 330 exclusive videos and still counting. And in addition to that, I'm now also posting unique exclusive video and text content over on Twitter to my subscribers. Check out the links in the pinned comment. I'll see you over on Twitter and or Patreon. Love ya.